last month, this market has been pretty much range-bound. The defensive names were the ones that were pushing our big days upward. Those look like they may be stalling out. I'm here with Mark Newton. He's the chief technician at Greywolf Equities. So, you know, the names that had been pretty good, the defensive side, looks like they're kind of pulling back. And the commodities that have been really lagging, you're saying may have bottomed out here.
Yeah, just in the last couple of days, you've seen some evidence that, at least with China's Shanghai Composite, is starting to show signs of bottoming out. The CCI index, which I look at as a gauge for commodities, has been up now 3 straight days. It tested former March lows, so now starting to stabilize and turn higher, led by industrial metals, some of the precious metals, even oil has started to bounce a little bit. So it might be a little premature, but it looks like commodities, after a big pullback over the last couple months, are starting to show signs of at least stabilizing. That's not to say that materials should start to move straight up, and they've been in a downtrend for almost 6 months. And so it's been difficult to try to pick lows in a lot of the metal stocks, but it could mean that at least commodities start to stabilize.
We had a earnings report from Alcoa last night, kicks off the earnings season. Alcoa earnings were up 58%. Is a story like this going to help them?
Well, the stock right now is basically unchanged, so it doesn't look much like it's doing a whole lot today. We'll see what happens to the rest of the sector. I mean, the market has been roughly range-bound for the last month. We've been locked between 1530 on the S&P futures on the downside to 1570 on the upside. So although the international indices, a lot of the European indices and the emerging markets have pulled back, the U.S. has been resilient. We've managed to digest a lot of this, a lot of these technical negatives by just showing internal sector rotation. So I don't know how long this can last. I think eventually the U.S. will play catch-up, but the price action in the last couple of days was somewhat encouraging. It means that we probably do not immediately pull back and test 1530, and if anything, we're still we're locked in a range bound just as we enter earnings season.
Are you looking then to get more involved on the commodity side if you think that it's a good chance to get in and write it up?
I think that's right. I think that commodity stocks in particular look interesting. A lot of them have suffered. They look like better risk rewards here in the market versus looking at those big cap industrials, which have risen and now starting to roll over along with the financials. Even technology, when signs of tech hardware are starting to stabilize a little bit. And a lot of that's Apple versus the S&P, but that's starting to look interesting as well. So it pays to be selective in this market. We haven't seen the deterioration here, but the market is certainly still seems to be running on fumes. Trend is positive, but it's been shaky over the last month. A lot of signs of momentum deterioration, a lot of groups starting to drop off with regards to transports, with regards to semis, the industrial starting to roll over, but yet you still have a lot of positives. Home builders are still in good shape. You know, you still have the beverage and consumer stocks are doing well. So selective environment and commodity stocks are one that I'm definitely paying a little bit more attention to over the next couple months.
All right, well, there you have it. If you've been looking for a place to put your money right now, it's been a difficult market to call. As Mark said, we've been pretty range-bound. Take a look at the commodities. Lots of choices out there. That's Mark Newton from Greywolf, and I'm Debra Borchardt with TheStreet.